Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. And we want to talk with Alan Pangbourne, the CEO of Chesapeake Gold. Good morning. Yeah, to Chile, I think it is, you said. Hi, Alan. How are you?
Good morning, Jochen. Yes, I'm down in Chile, avoiding cold Canada for a little while. I actually go back tonight, and I'm heading down to the BMO conference as well, which is great. First time Chesapeake's got an invite, and looking forward to meeting another group of investors. So.
Fantastic. Super. Then safe travels. But before you travel, we want to talk about your fabulous news you had several hours ago. And you announced an updated mineral resource estimate, and you had a 15.8%, let's call it 16%, that's easier to say, increase in the gold grade for the intrusive and intrusive pressure zone. What does that mean?
What does it mean? That is the key part of the ore body that we're focused on for the phase one project that was in the PEA that we put out August, almost a year and a half ago now. And if you remember, we did some drilling to get some samples, and we got higher grades than we expected, and we did some more infill drilling in that zone. And it's taken us a while because we had to go back and check that everything was right before we put the resource out. So we've done all of that work now. This is the impact of that additional 23 holes in that key zone, which is the higher grade zone of the ore body. And that is really important because it will impact the economics, because an increase in grade is an increase in revenue per ton, and it goes straight to the bottom line.
Yeah? Absolutely, so
it's great.
Yeah, because it means you have to move not more rock. You move the same rock and you make more money.
You move the same rock, and you make more money per ton for the same, effectively the same costs.
Yeah. What were the implications if you look at your previous mineral resource estimate to now? I think the tonnages and the overall measurements went down a little bit, but it looks to me more economic, because honestly, I don't care if you have 15 or 17 million ounces gold or 14. It is a monster project, right?
Exactly.
I think the economics are key, right?
Yeah. Look, we've always focused on that higher grade zone for the starter project, and then we can expand as we get things up and running and going. And I think it's a wiser way to develop projects. So you're right, the tonnages have gone down, and there's been some reclassification between measured, indicated, and inferred. But at the end of the day, there's still 19 instead of 20 million ounces, I think it is, and 480 instead of 550 million ounces of silver. So it's still a massive deposit. And we're only looking at that first piece. And even that first piece is a 31-year, or was a 31-year mine life. That will probably shorten a bit because the tonnage have gone down a bit. We've been a little more restrictive when we built the model and not let it just push grades everywhere. We suspected that may have occurred in the older estimate beforehand, and then coupled with those new drilling results, we basically got a third party, Mark Justro, who's well known in Canada, to go through the resource for us, with Carl Edmonds, who I used to work with at SSR, who's another top geologist. They went through all this for me. They reviewed the assays. We sent some samples to do some check assays as well to make sure we understood on the older assays that they were all okay. We actually spent a lot of time and did a lot of work to make sure we're confident to be able to say it's 16% higher grade, because it will have a significant impact on the economics.
Okay, super. If we talk about economics, for the calculation I found in your press release, it was stated to satisfy the NI 43-101 for the reporting of the mineral resource, you have to provide reasonable prospects for economic extraction. So you took the same parameters like you did in 2021. So now the question would be to me, I'm fine with $1,600 gold. I'm fine with $20 for silver, for example. But with the mining costs, processing, G&A, isn't that, or would that not be higher? through to inflation?
Yeah, but look, potentially, but we're at PEA. We're a long way from going into construction. We're a long way from doing a feasibility study. And, the PEA was done at a point in time with those parameters. If you sat and did it all again, would you use $1,600 gold, or would you use 17, or would you 18, or would you go down to 15? That's a decision you take when you do the next study. But, if you sit there and say, okay, we're going to take inflation for today for operating costs and capital costs, then you probably have to readjust your metal prices too. And they probably offset each other.
Yeah, that's right.
It's interesting the way the market tends to hold your margins. Yeah. The gold price goes up and all the damn costs go up to squeeze your margin back down again, or vice versa. Yeah.
No, so for me, it was interesting to see that, because I had the same feeling, because I think $1,600 for gold is in the longer term very conservative, and I think the same way for silver, because when I look at the deficits in the silver market from last year and already this year, I think nobody has understood that silver will have a problem for the physical supply in the future. There are no big silver. There's, I think, only Max Silver going now in production with a large mine, a real mine, and I'm not aware of anybody else in the size of 20 to 30 million ounces of silver within the next 12 months or 24.
Look, my experience when I was with SSR, and the reason we shifted from being a silver mine, silver standard, to SSR mining and going into gold was trying to find a replacement for Piraquitas, which was producing 12 million ounces a year or 10 million ounces a year. It was really difficult. They just aren't these large silver mines around. There's Cannington and there's a few others, but in general, silver's a byproduct. And there just aren't the large silver mines. And so, SSR moved to gold. Metates is a massive silver deposit. If you actually look at the it's quite interesting. The metal weight is 90% silver, 10% gold. The value is 30% silver, 70% gold. But there's a lot of silver there.
Yeah. Anyhow, it is a super large project, and of course the development would take another several years for sure. And I saw also that you were talking already about ongoing metallurgical work, your met work, and you want to form there a basis for a new pre-feasibility study. So how is that going there? I know those met work testings, they take time, as you explained in the last interview. So what is your time plan here, or let's say the next work phase? When do you think you can deliver a pre-feasibility? Because then it's getting really interesting, I would say.
Sure. I mean, the pre-feasibility study is the obvious next step. So we've been working diligently in the background to get not only the met test work, but everything else you need. So, for a PFS to be legitimate and then also to get into the permitting system, I have to have a exploitation agreement with the local communities. So we've started that work, and I don't know if you saw some of the social media feeds. We had a great meeting in November last year with the local community president and secretary at site, explained to them where the mine is, and we'll go back again probably around Easter time and sit down with them again. It takes time. We've got to have water resources. We've got to have power line and a power room. We've got to know where we're going to put all this stuff to be able to truly say that is a real pre-feasibility study. And so we're working on all of that. The environmental monitoring has been restarted, and it's been ongoing now for over a year, and it will run for another couple of years until you get to feasibility and into operations. At the same time, we're doing the met test work. That is the key. That is the most important thing. We put out the proof of concept in August, September last year. We know it works. Every column we've run has oxidized. the issue we've got is the speed at which it's oxidizing. And so we're testing a whole bunch of different variables to try and see which variable will help with that kinetics. So I'm quite comfortable. Can you oxidize the sulfides in a heap leach environment with the chemistry set we're using? Yes. We got 60% gold recovery. We've just got to get the kinetics up and understand why they were slower than we expected. And we're moving towards that. You know, I've got, I don't know, 20 odd columns running. I've got 1 or 2 now that have been running for over a year. But it takes time. That's the problem. You know, investors aren't the most patient people. And so, you know, we're working.
I have not sold.
Good to know.
I'm still a shareholder.
So we're still working on it. We're working through various variables that you know, crush it finer. Use HPGR crushers. So there's a HPGR crushing rig over at UBC in Vancouver. So we've run some material through that and loaded that into columns. You know, we've got 1/4-inch columns running. We've got some standard 1/2-inch ones. We're trying different air rates, irrigation rates, reagent strengths, a whole suite of things to see which variables impact what. Yeah.
Okay, cool. Super. So what would you say? Next year pre-feasibility? Is that something you would say that's possible?
Yeah. Yeah.
Okay, super. What are your plans this year then, let's say, for drilling, for other work, community work, etc.? What do you want to do?
So this year is all about support for that pre-feasibility study, as I just walked you through. So it's communities advance the negotiations for an exploitation agreement, because I need that for my permit application. 2 things will get my permit application rejected in a nanosecond. No agreement, so therefore no clear access to the land to go dig a hole. No water supply. I've been through this before in Mexico, and I know what they look for, and you've got to have those 2 clear in your permit application. The pre-feasibility study will form the basis of that permit application. So working backwards, what have I got to get sorted out? Water supply. Power supply, we've got a nice surprise. We've got all the data now around. There's an existing power line that comes all the way to that little village, which if you saw the pictures in social media, you would have seen a picture of me and Eric, the CFO, with some other people looking out over a hill. That was site with the village that's nearby. And so there's a power line to that village. It's not big enough for what we need. But the important thing, which often takes a long time as well, and you mentioned Mag Silver earlier, one of the issues they had was getting their power line in. We've already got a right of way that's been agreed with the local communities for a power line. So we've only got to upgrade the power line. We don't have to negotiate a new right of way.
Okay, super.
Which makes it a lot easier. Yeah. Changing cables and changing poles is a lot easier than negotiating a right of way. However many communities.
Yeah, absolutely. Super. So how much money is in the bank still?
I'm trying to think. When we haven't put out Q4 and end of year yet, but it's
approximately.
It's still in the mid to high 20s.
Okay, $1 million. $1
million, yeah.
Yeah, of course.
So we're that's the other thing. We're probably one of the few juniors that are wandering around that have actually got money and don't need to go and raise $3 million or $5 million to keep the lights on and the door open. Which is a real advantage, because it means there's not going to be any dilution all of a sudden dropped on the shareholders.
Yep, absolutely. Yeah, I mean, I could imagine your burn rate, even when you drill some stuff, is not that high. So you can easily do the next, 3, 4, 5 years, right?
Certainly, we believe we can get to the end of feasibility study with what
that's
we've got in
important.
the bank. Right?
And then maybe you will get anyhow an industry partner because of that size of the project. Jesus.
Yeah, the reason we've gone for a smaller project is risk and the ability, I believe, that we can do it ourselves without having to get diluted by bringing in a large partner. That said, I mean, if somebody shows up with a big fat wad of 50s, who's going to argue?
Absolutely. That's right.
Right.
Definitely. Yeah, for sure. Super. Maybe one last short comment, because I'm really interested in that also. What is the difference between sediments and Depressure?
So when the deposit was formed, you had an intrusive. As it came into the host rock, the sediments. Okay, so the intrusive came in. As it came in, it broke up the rock that it passed by, and that forms what they call a breccia.
Okay.
So it's got class of the host rock. So sometimes the host rock is dominant, sometimes the intrusive is dominant. So an intrusive breccia is where the intrusive is dominant. So it's bits of the sedimentary rock within the intrusive. When it's the other way round, when there's more sediment than intrusive, it's the sedimentary breccia. Okay, so we separate the classification based on what the class are in it.
Okay.
And then the host rock, the mineralization has bled out, or we believe there may have actually been 2 mineralization events because the gold-silver distributions are different. If you look at the SEDs to the intrusive, not only is the intrusive high grade, but the ratios of gold and silver are different. So there may have been a second event. I'm not a geologist. Don't ask me. I'm a metallurgist.
Anyhow, I learned something.
That's what I've been told. So that's the difference.
Yeah. Okay, super. Yeah, great. Thank you very much for the update. And it looks like that you guys are really on track and on the run. And each time you guys are drilling, you have a higher resource, higher grade, or let's say higher resource, better quality of the resource, of course, and also now again higher grades. So I think it's getting more and more and more economic.
Like I said, 15, 16% increase in grade in the same tonnage, even though we lost 1 million ounces of gold or something. When you got 19, 20 million ounces, as you said, it
doesn't
really
matter.
Doesn't make that much difference. They're so far out into the future, it doesn't matter. But the key is that grade, because at $50 a gram, 15% is $7.50.
Yeah,
a ton.
absolutely.
It goes to the bottom line.
It's a lot of money, I would say.
Yeah.
Yeah, that's great. Super. Alan, thank you very much. And wish you all the best, and hope to see you soon somewhere this year in Europe, probably. And take care and safe travels to the BMO. And let us know what's going on there. And please, keep us posted.
Good to talk.
Super. Thank you very much, Alan. Thank you. Yeah,
bye.
Ladies and gentlemen, that was Alan Pangbourne, the CEO of Chesapeake Gold. And you heard it, approximately 16% higher grades in that new mineral resource estimate. That is fantastic. Of course, the tonnage went a bit down. The amount of gold ounces went down, but the economics shall be much, much better. And they are on the path, on the way for pre-feasibility study. And then it's getting really interesting. And hopefully they have that already next year, because that is would show a lot how this monster deposit with gold and silver, gold is approximately 70%, silver 30%, is really economic then. And I could imagine it's already on the radar of some of the big boys. Thanks for watching us. As said, the company has enough money in the bank, so that you cannot pressurize them. That is also very good. They don't need to finance, no dilution. That's what we like. I'm a shareholder of a company. Maybe you should have a leg on it. Thanks for watching us, and bye-bye from Switzerland.